Hey everybody, good afternoon. This is Doc Severson with 12-Minute Trading. Welcome to our 12-Minute Trading webinar here today, or live stream, I guess you should call it. I'm joined here with Dave Lukas. Today is Monday, the 2nd of December. We are in the last month of the year, the final stretch, and what a year it's been. Actually, the S&P in November was the biggest monthly return for the year so far. Amazing. So, none of the analysts had predicted this. Nobody had this in their bingo card for, 2024. Everybody's been predicting a recession for the longest time. And there's plenty of reasons for that to happen, but it's really interesting to watch what's happening in the market right now. And we just continue to play with the trend. So, Dave, what are you seeing out there in the market this week?
I'm seeing an uptrend.
Yeah.
We've been talking about this and said that we thought that we would get that, higher grind through the end of the year. It looks to be playing out. I think this week is kind of we may get a little bit of a pullback towards the end of the week, beginning of next week, with the daily energies kind of getting exhausted or just walk sideways a little bit. This may be one of those weeks we just kind of go nowhere for a little bit, or at least towards the end of the week. I do think the NASDAQ is breaking out. It had full energy, and today is its energy started to break, and release, and it's headed higher. I think the NASDAQ's finally kind of catching up, right, to the rest of the market. But the S&P and the Russell are kind of needing to go sideways a little bit because they're into that exhaustion. But I think we'll see that maybe in the next week we see some of that. And then you got the Fed after that. I don't think the Fed's going to do anything out of the ordinary or anything the market doesn't expect. And then you're into that Santa Claus rally period, and you put that kind of parabolic tail into the end of the year. I think we could see. So that's really, exactly kind of how we have said we thought it would go, and it looks to be playing out that way. Now, the only caveat, and my students have been with me for a long time, Doc, you know this too, it always seems to happen, is I've got travel for the next couple of weeks coming up. I won't be here, Doc will be with you guys, and usually when I travel, markets misbehave. And so we'll see. Though this time I'm kind of clearing the decks and getting a lot of trades all closed out for profits and everything ahead of time, so maybe the market won't misbehave because I don't have a ton of positions on or something like that. But that's what it looks like out there.
That's pretty wise. Yeah, I've learned that a long time ago. Like, I just reduce the stress level and clear what I can.
Yep.
We got some interesting things happening this week, though, because not only the jobs report on Friday, we've also
That's
got
true.
Jerome Powell on Wednesday afternoon. I don't know
Hmm.
where he's speaking and to whom he is speaking to, or what
Right.
the purpose of his speech is. But what we saw was a couple of weeks ago, he came out and was a little bit hawkish, and all of a
Yep.
sudden, we dropped 2% on the S&P. So
Yep.
we always got to watch out for Herr Powell anytime he comes out. So there's that. We've got a pile of Fed speak this week, an absolute pant load of it is probably the best description, just because
Mhm.
this is the quiet period coming up this weekend. So
Yep.
they're not allowed to talk for the next 10 days after that until the next
Right.
Fed meeting, which is, blessed silence, but they're going to try to cram it in until Friday. So there's a whole bunch of Fed speak out. So
Well,
I,
and
I
what's the Fed funds rate for a quarter point reduction? It's what,
65%.
50%?
It was
Yeah.
65% this morning. So,
Yeah. So
well, which is not bad odds, but I believe that will change by this Friday. I don't know which way it's going to change, but I think we'll
after
get
he speaks.
yeah, after he speaks, and also after the jobs report, I think we're going to have a pretty good market's done a really good job for the past few years about figuring out exactly, like, I can't remember the last time we had a surprise rate cut or rate hike or any
Right.
kind of surprise.
Well, and that's kind of what I was saying before. I would not be surprised at all to see a little bit of a pullback next week ahead of the Fed, and then that rally kicks into the end of the year.
Right.
Just with where the energies are at, getting exhausted like they are, would not surprise me at all. It wouldn't be much, maybe you get one day down like 40 points on the SPX back to, 6,000 and hang in that range or something like that.
Yeah,
But
this is what Dave's talking about here, is that we have we have trend all over the place to the upside right now. Everything looks trending is great. However, as we found out, is that there's a limit to how far things can go. Can't go forever to the upside. So we have a very linear move, about 58.50 up to about 60. So this is about a 200-point move that we've seen just over the last, say, week and a half or so. And we're in exhaustion. So we might expect to see a little bit of sideways, maybe even a pullback here in the near future. So this week would be, one where we'd expect to see a little bit of chop into Friday without resuming the trend or continuing with the trend.
Yeah, and I wouldn't be surprised to see us continue to be okay until we get into like maybe Friday with jobs and into early next week. And then that's where you get your softness, kind of finds its bottom in the midterm, again, like a 40-point pullback on the S&P, not like anything big. And then walk sideways, get the Fed over with, get through that week, and then I think you're into that Santa Claus rally period. And remember, that rally goes into the beginning of January. So
Dave, do you think there's any possibility that we see rotation into the NASDAQ? Because
look at the energy.
We see there's more potential energy in the NASDAQ than any other chart that's out there right now.
Oh yeah. I think the chips are gonna the chips are gonna get it. Like a good play on that is like Soxel. Soxel was beaten down. At the last week was down in the 20s. It's now back up to 30. It's at 55 for its daily energy, just starting to release. It's a good one to look at selling on. So SMCI is definitely, I don't know if anybody saw that with SMCI, but one person from their board came out and said they did an independent audit and their books are okay. So now everything's great.
Man.
So that's their we're fine, thing for. So I don't know if that's over yet, but it's pretty funny.
Nothing to see here. Move along.
We're good. Independent board member said it was all right.
So let's see. Nicholas is bringing up.
MSTR has been consolidating. I've been playing MSTX as a way to play MSTR. It is not for the faint of heart. We talked about that last week, but we're kind of pulling back right to, if you put that Bollinger Band on MSTR, Doc, that Bollinger Band with the moving average, we're kind of pulling right into that moving average range, kind of consolidating, doing a nice triangle pattern. Usually those break to the upside. So I think MSTR is just getting ready for the next kind of spike higher. So we'll see though. I did see that the U.S. government moved almost $1 billion worth of Bitcoin over to Coinbase. So I don't know if that is because they're going to unload it or something, or maybe they're trying to make up for, Michael Saylor buying every eligible Bitcoin that exists out there right now. But yeah, so this thing looks like it's just consolidating, getting ready, getting charged back up and ready to run again.
That's interesting. One of the things that I want to search on right now is, in fact, I can bring this up over on the. I'll bring this up on the screen here. How many Bitcoin have been mined? Because remember, there's only 21 million.
Right.
As of December 2nd,
lost
19.7 million Bitcoin. So there's only 1.3 left. 1.3 left to be introduced into circulation. And those aren't those
the ones that are all lost? I mean, there's a ton that are lost.
Everything that's lost has already been spoken for. It's lost. It's gone. Nobody's going to recover that. I'm sure at some point somebody will make some kind of effort to say, hey, anything that's on the blockchain which hasn't been moved, or let's consider that lost. But 1.3, and so this is like Moore's law times 10, because what we're going to see is we're just going to see a mad scramble. I don't know if it's going to be next year or the year after that, but the further up you go, the harder it is to mine those things.
Yeah.
And it becomes an exponential problem to or an opportunity, I guess you could look at that.
Yeah.
So definitely.
Take a look at XRP right now.
XRP. This is one of the Actually, I've got to go to a different chart because I can't do it on.
If we're going to have some fun with Bitcoin, I wish there was a way to trade, more than just, Bitcoin itself. I wish there was like an ETF for like XRP or some of these others, but that thing's
Well,
freaking out.
we do have. I think Ethereum has got. Yeah,
Yeah, Ethereum now has
this
one.
is Grayscale. There's a couple of Ethereum, and they're only $30. But the problem is that we don't have any options for these things
Right.
yet. So let's Coinbase. We certainly do.
Oh yeah.
Now
Actually,
these will.
just a quick side note on that. A good leveraged ETF that's been around a few years for Coinbase is CONL, CONL. It moves pretty much with Coinbase and it's about 50, $60 a share. Great option activity on that thing. Usually the at the money and then the even fives have good open interest. So I think Coinbase is getting ready to break out. I think it's kind of like MSTR. It's got that triangle. It's sitting right there, kind of walking sideways, and it's getting ready for its next bounce higher from here.
But
Big bull flag
everything ends up being a derivative of actually Bitcoin.
of Bitcoin.
Yeah,
Yes.
no, everything is really a derivative of Bitcoin ultimately. So whether it's MSTR is a
Mhm.
derivative of it, which is kind of a
Sure.
skewed derivative of it. What are some of the other? Let's see, we had Riot.
MSTX is a derivative of MSTR.
Riot blockchain is another one
Yeah.
of these, and
Riot,
it's
Riot, Riot, Mara, MARA.
yeah, and they all have essentially the same
They're
looking
miners.
chart
Riot
pattern.
and Mara are miners. So to your point earlier, it's going to get harder on them, but I think those two are the ones that survive the remaining Bitcoin wars, if you will.
Yeah. So the one, if you're out there listening to this or watching this on a replay later on, if you're looking to get involved with some kind of cryptocurrency exposure, probably the one that's going to have the least amount of skew and is going to be the most neutral is going to be something like an IBIT, which is not leveraged. So right now it's not leveraged. It's not. They haven't split the shares or done reverse splits or anything like that. And it's got a really good options chain. It doesn't have dailies yet, but I think that's only a matter of time until we get the. But if we look at the weeklies, and if we look at the volume and open interest on there, it's massive. Look at the spreads on these are actually really good.
Mhm.
So this is a hugely traded, and this has only been in 2 weeks that we've had all this. So this is, I think, the way to go. So what I'm looking for personally on this is that I want to sell at 44. I want to sell puts at 44. And right now I can get about maybe 1% or 2 by doing that. I want to see if we can get a little bit more of a pullback down into this area, maybe down to the 50, maybe, into your moving average on the Bollinger Bands.
Mhm.
And then we've got a really nice sell on 45. Now, last week, the thing that I noticed was for you guys, for you options freaks that are out there, if we look at something like this, let's just go 18 days out. That's probably all we need. Look at the amount of call skew that we have. So if we do something like this, let's just say, just for grins, we're at 55. So if we go down 5 points, we're at about $1 here in the puts. If we go up 5 points to 60, we're well over that. So there's definitely more premium. There's more extrinsic value up with the calls because people are buying calls like crazy. Now, eventually this will flip. This will flip to the puts. And that's what I want is if we start pulling down into a normal pullback, then the puts will light up. And this is where we're going to get all of our premium. So last week, what we did was when the price was jumping up here to 100, we did a buy right at 57. And so we sold the $57 calls because that just gives us a really easy, like 10% trade for this. So getting the capital gains on these and then the call premium and everything like that. So even if the price ends up going back down again, we're going to be in good shape. So all kinds of things that we can do on these derivatives for Bitcoin. I mean,
Great way to
the
collect.
world, the trading world
Yeah.
just keeps getting better. That's the thing that I've noticed. You know, since you and I started trading, when we were trading monthly
Monthly
options, you know,
cycles
like
on
monthly
the indexes.
cycles, yeah, on the indices and everything, and just there was no liquidity on the options. I can't imagine what it was like for the guys that traded options back in the 70s and 80s. It must have been, you know, they were paying a fortune for all their commissions as well too.
Oh
So
yeah.
things continue to get better from a trading perspective. Now, the only thing that I've found to be a little bit frustrating lately is that they've really clamped down on some of the rules. Like some brokers are not allow, I guess, to do like time spreads, like calendars
Mm.
and diagonals, which is one of our better strategies right now.
Yeah.
So there's those kind of things, and I think we've gone through our cycle of free commissions, because free
Yeah.
commissions just means that you're getting a lousy fill,
Right.
because because what they're doing is they're aggregating a whole bunch of orders to ship off to a preferred broker. You may not get necessarily the best fill.
Yeah. In fact, you see that they're going the opposite way. They're doing dynamic fill. So you can see like even Thinkorswim now is showing you like what you put it in at and what they got you, right, for your
Yeah,
fill price, whether it was better or not. And so they're trying to justify their pricing, with that sort of stuff. So, but you can still negotiate fees if you haven't done that and you do a decent volume of trading. It's worth it to ask. You don't know unless you ask. So it's good to do that out there if you're looking to save a little bit of money. But I agree with you. Like right now, I think where it's at, obviously, we're, and it goes through cycles, right? So, like anything, I think, getting into a melt up. I think that's happening. I think crypto's going to be part of that lead. I think the Mag 7 are still there. In fact, a good chart to watch, guys, is MAGS, MAGS. You may want to pull that up, Doc. That tracks, it's one ETF that tracks the Mag 7. If you want to own the Mag 7, just buy MAGS. Its option activity is okay. The premium's not that great. It's not leveraged or anything, but it's you just watch that if you want to see what's happening with the Mag 7 and where things are going. But the the trend seems to be, you know, I think we maybe get a little bit of softness here into, kind of mid-December. Then we get that rally, maybe parabolic tail into January. And as we've kind of said, as we get into January, kind of all bets could be off. So yeah, you can see, look at the spread on them, and stuff. There's just, yeah, you can get a couple bucks a month or so, two out on them. But I like the chart just to kind of see the trend of where these guys are going. That helps you.
yeah, these are
The open
these are
interest isn't great on it.
yeah,
Yeah,
it's
exactly.
non-existent. These are
Yeah,
awful. Yeah, but
yeah. The front month has a lot more, but the further you go out, just so I just like watching the chart to see where they're going. It looks like their chart is releasing higher right now, and that may be why we're seeing that kind of rotation back into the Nasdaq.
so Brewhead's talking about that we talked about the crazy opportunity with MicroStrategy, that we see this from time to time. Like, so when you see a chart like this, what is everybody doing? Everybody is trying to buy. When you see a market that does something like this, oops.
What's funny is Brewhead, you can do it again; it's still there.
Yeah, I mean, it's when we see markets like this. So let me just go out to, like that. When you see markets that are just ripping to the upside, everybody's just trying to jump all over this thing and go long. And we're doing the opposite. We're selling puts behind it. So if we look at, so even with today, we're at 378, but still you could go,
Just down a
oh,
week.
let's say to January. You got 46 days. And the way to do this is always, 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 if you're going to sell puts, you always want to start by saying, all right, where would I want to buy on this chart?
Mhm.
That's what you've got to start with. And I would say, 200 is where I'd, honestly, is where I'd be a valid buyer of this, is 200. And with this volatility, let's see, what could we get for something like that?
You're gonna be paying like $60. You can. one contract's paying you $6,000.
No,
Oh,
that's
that's at the
six.
money.
That's
Sorry,
seven hundred
that's at the
dollars.
money.
So you're making 700. Um, let's
On
see.
20K, which
Yeah,
is, what, roughly, oh,
that is a three.
4 to
That's a three and a
5%.
half. That's a three and a half
Yeah.
percent return. So for most people, over the course of 46 days, making a 3.5% return on something that you'd be a willing buyer of. Now it is taking out 20 grand of your capital that you can't touch, but a 3.5% return and making $700 for basically doing nothing is really what we're all about. I mean,
Mhm.
it's passive income. This is what we do. And it's when you run into things like this that have 152% implied volatility and an expected move during that time of 180 points, that's the interesting thing here. The expected move is plus and minus 180. So if you look at this and you say, okay, what's the expected move here? The expected move is, let's go from 380 plus 180,
Mhm.
which I can't do in my head, but that's going to be 560. So
560, and then 200 on the downside.
and then 180 is going to be, yeah, that is 200.
Mhm.
So
Right
we're
at where
right
you're
there.
selling
We're
it.
right there at the expected move. So there's a 68% chance that the price is going to stay within this envelope from here until the middle of January. 68% chance. So for most people, if you would say,
Doc, you may need to pull it back up while you're narrating that.
oh yeah, I'm
I can
sorry
see it.
about that. So there's a 68% chance of being in this envelope here. So I think most people, if you would say, all right, we're gonna let you step up to bat in this baseball game, and you got a 68% chance of success. You'd be the best hitter on the planet ever in history, right? With a 680 batting average. So
Mhm.
that's not bad. So I think staying above 200, and that's the one thing I had to learn when I was doing this strategy when I was first learning about it was, okay, what is the price level at which I would be a committed buyer and not, like a lot of people will say, hey, I'm going to sell this put up here, and then the price runs through it, and then all of a sudden they panic and they buy it back, and it's not a
Yeah.
good experience. So you have to start by identifying where you want to buy it at.
Now let's take a little different tack for those with smaller accounts. It's a little riskier because it's not just owning the stock, but let's look at a put spread at that strike.
Okay. And let's do it. Let's do it too wide. Let's see what we could sell it for. So we'll start off with too wide. And so we're going to make 35 cents a credit, hopefully, if we get filled on that. And
That's
so
probably 30 cents you get filled at, probably.
yeah, okay. So let's say we get 30 cents a credit. Now, what is our risk on that 30 cents a credit? It's $170, right? So that's the most that we could lose from this. So 30 divided by 170 is
Not a bad return.
17% return, which is not bad.
Mm-hmm.
So, yeah, that's a good point for somebody with smaller accounts. Now, what we typically try to do is even when we're doing these, we'll try to get them a little bit wider. So if we sell like a 200 by 195, which we find usually you can get a bit more credit. So in this case, probably you get let's say a midpoint is 65.
Mm-hmm.
So 65, and then
You're going to get a better chance to fill. That other one, the too wide's probably going to fill lower because the bid and ask was so far apart.
right. And so this one's going to be a risk of 435. And this one will decay
15%.
faster as well, too. So 65 divided by 435 is 15%. So you're still getting a nice return on something like this. And it's still
Now,
risk
here's the secret though. Don't go load up, right? On a bunch of them thinking, oh, if I had 10K of capital or 20K of capital to sell just the naked put, right? I'm going to take all that 20K and go buy 40 of these things or whatever, right? You want to make sure that you understand that you have a very defined risk in this, where one is, hey, I own the stock, I could turn around and sell calls. You're wheeling it, right? This is, if that thing goes through those strikes, you're losing, right? So you're losing by a lot more. And so you want to make sure you position size it right and account for that. And know what you're going to do, right? So what do you do, like if it goes against you, right? Where do you exit at? What's your stop if you're going to do it that way? Or are you going to just roll this thing because you want to keep playing it in the future? So you got to know what you're going to do when you get into it. But position sizing is important when you're doing the spread side because it can get addictive.
Yeah, let's look at this vertical. Sometimes what really helps is to do a visual on this.
Mm-hmm.
So if we look at the risk profile on a visual basis, you can see, let's see, we don't want that single in there. And we want to set that for 12.2. Not sure where our line is on this one. We're missing our, there we go.
Yeah, there you go.
Oh, we got it. All right, so what Dave is talking about is this is the good stuff that's up here. This is your profits. And then here's kind of the break-even point or the break point for your short strike. And this is where you don't want to end up, is the valley of sin down here. Because for, your reward to risk is relatively poor on this trade, but your probabilities are astronomical. But could the price come down to 200? Absolutely, it could. You can't control that. You can't predict the future. You're not going to, and there's not much you can do about it. So typically what we have to do is once we see a certain loss level that occurs on the gold line, like when we're getting down to like a 1-to-1 reward to risk loss on this, we want to avoid the black hole down here. What we'll do is we'll just either close it out, or we're going to roll it further out in time, or maybe even down. There's various defensive things that we can do.
And Android had asked why 435, because we're taking the credit into account. So if it's a 5 wide spread, the risk is $500, but we got paid $65. So our real potential loss is 435.
Okay, so on a $5 wide spread, the maximum loss is the width of this minus the credit. So that is 435. So that represents the real risk of the trade, is 435. Okay, anybody have any final questions? We're coming up near the top of the hour here, and we don't want to impose upon anybody and over.
Yeah, I just think the big takeaway right now is that I think the Nasdaq's starting to rip. I think the S&P and the Russell may have to go through some chop, get charged back up. Don't be surprised to see a little bit of a pullback in either of those. Russell, we kind of had it for a little bit today. That's kind of that sideways high flagging action. We're seeing the same thing in the crypto markets, the MSTRs of the world, the Coinbase of the world, and stuff seem to be flagging, getting ready, kind of for that next leg up. Only thing that obviously can, have issue to all of this or kind of stop this trend from happening is like some unforeseen event or something that comes out, right, between now and the end of December. So I don't think it's going to be the Fed. I think the Fed's going to, they've already said their piece, whether they raise or not. I don't think that's going to make that big of a difference. It's going to have to be something either geopolitical, something bigger like that, that really comes into play, right? As of now, it's not on the horizon, but we'll just see. Otherwise, I think we end up grinding higher, ultimately hitting that Santa Claus rally period, maybe going parabolic into January. And then once we get into January, if that weekly chart's exhausted or when that weekly chart gets exhausted across the board, that's time to be really, really cautious. That may come later January, but for now, it just seems like we are kind of in that parabolic, getting ready for that parabolic run higher to kind of maybe end this, uptrend cycle have your correction, then get started again as of now.
Rope them all in before
Yep,
you pull the
exactly.
rug. Yeah.
Yep.
So, all right, everybody. Thanks very much for joining us today, whether you join us live or whether you're watching this on a replay. I will be back next Monday, so just going solo, but we'll do the same thing again. And, take your requests, take your questions, and let you know what we see in the market. Thanks, everybody, for joining us today, and we'll see you next Monday. Bye-bye.